flood market of Michigan.
All right, I know you're all excited about this as the 2.0 changes. Has this made anybody else pull their hair out? Because this is why I don't have any. You thought the original program was bad? 2.0 has been really hard. I'll tell you one reason was, just think about this. Think about bringing technology into an agency for the first time. It's going to be a disaster. We might as well go ahead and prepare for it. Well, like in a situation with 2.0, I'll tell you, all the way back when it first came out, my team, I thought they were going to walk out on us because it was taking FEMA 6 months to process a cancellation because their systems weren't talking yet. And so we had to keep explaining to a customer for 6 months why they weren't getting their money back from FEMA. And then 6 months later, they finally got it back. And I was like, welcome to 2.0. But with the 2.0 changes, I'm going to go through a few things about what's different with 2.0, how they build your rate, and then we're going to get a little bit, once we get through this section, we're going to get a little bit into private flood insurance and flood maps. Sometimes this color doesn't come out well on a projector, but I'm briefly going to go through some difference with NFIP and 2.0. Now, you heard me say that flood zones don't matter anymore. They have absolutely no impact on rates with the National Flood Insurance Program at all anymore. So when a customer comes to you and says, hey, flood insurance is not required because I'm in flood zone X, so why is my rate $1,500 a year? It's because FEMA is using particular things now to determine their rate. It has nothing to do with the zone, and we're going to talk about some of those. One of those is prior claims. So let's say that you have a customer that decides to file a claim next week, and let's say they had 2 claims 5 years ago. With FEMA's new system on renewal, they use something called claims variable. These can be a multiplier on the renewal. So their renewal could significantly go up over that 18% statutory rate because they're looking at claims history now. Now, traditionally, they've looked at claims history a little bit when it comes to repetitive loss, severe repetitive loss properties, and we'll talk a little bit about that. The big things that they're using now are things like distance to water. Replacement cost is a big one. Does anyone here write any commercial flood insurance? Has anyone done any quotes through NFIP since 2.0 came out? Have you tried to change the replacement cost of the building any? So that's when you'll see a big rate difference. Now, with residential, it's already in here. The challenge is with commercial, it's not. And so let's just say the customer wants $500,000 in coverage because you know that's the most NFIP offers. So you put $500,000 as replacement cost. They want a verification. And I'll tell you one, we had an agent come to us on a few months ago, was like, hey, why's the rate difference by $2,000? I said, because the replacement cost of the building was $3 million and you put in $500,000 and your insured got a letter 3 weeks later by the difference. That's what, replacement cost is a big rate driver with the National Flood Insurance Program now. So that's just something to think about, which is kind of crazy because it's not offering any more coverage because of that. They're just using that as part of their rating model. Distance to water is another one. Let's go back to the Midland Dam flooding. Think about the houses that were right behind that dam. Before they had a preferred rate because they were what's called a shaded flood zone X. They were in the preferred area. If they had an accredited dam, might have been paying $400 or $500 a year. Heck, they may have a $5,000 rate every year now because they're looking at distance to water. So it completely changes for these communities that are around levees, dams, that are protected by something. The National Flood Insurance Program really isn't using that accredited dam that much. They're looking more at distance to water. One reason is, like Midland, a lot of areas across the country are getting overwhelmed with flash flooding with these dams. They have to open up spillways, and then when they open up that spillway, that water has to come downstream. And so those, distance to water, prior claims are having a big impact. The type of flooding. So like we talked about, coastal because of the Great Lakes may be rated completely different than a river flooding, than a flash flooding area. This is the first time really that FEMA has looked at these when building this rate. We talked about replacement costs, flood frequency. If an area floods a lot more often, these rates could change next year based on that. FEMA's looking at all this different data now. First floor height. Before it used to be a crawl space, and you could see that the crawl space was like a +2 in elevation. Now with their system, they use the first livable floor. So a basement does not have as big of an impact anymore on you as it did before. When someone came to me with a finished basement, they give you heartburn because you were like -8 feet. Oh my gosh, this thing's gonna be $8,000. And so now with their system, they don't use this a lot. Coverages. As much as they wanted to change coverages, they have not. Because let's be honest, you can't replace anything for $250,000 anymore. Everything is, $300,000, $400,000, $500,000. And they wanted to release that with their 2.0, but their plan is to do that in a few years when they change their forms.